To keep yourself updated, subscribe to IndigoLearn and click the bell icon and download our app OneFin to start learning on the go.
Moving on to the next one, let us take the first descriptive question. Now, here the question is talking about Abhinandan Limited, a chemical manufacturing company having its factory located at Nanded village for the year 21-22 appointed Subahu and company as their statutory auditors. During the course of audit, Subahu and company identified that Abhinandan Limited received a show cause notice from National Green Tribunal based on the investigation performed by the Regional Forest Department for violating environmental laws. Okay. Upon gathering a further understanding of the said matter, it was identified that Abhinandan Limited was dumping toxic solid waste without treating it on the nearby grounds, and because of this, the nearby water bodies were getting polluted. So it's environmental laws which you are, avoiding. Based on the preliminary investigation performed by the Regional Forest Department under the directions of National Green Tribunal, it was identified that these practices carried on since 2009, and a lot of damage has been happened to the government because of them. And a show cause notice was already issued to Abhinandan, leaving a penalty of 500 crore. Okay. The unaudited profit for the financial year was 35 crore and unaudited turnover was 100 crore. Upon inquiry, it was identified that Abhinandan Limited was disclosed this matter in the financial statement by way of footnote, the extract of which is given below. The company has received a show cause notice from the National Green Tribunal for some potential violation of the environmental laws, and the company's legal department has assessed and found that judgments would be in the favor of company. Accordingly, no provision has been created for such notice. In the light of the above scenario, kindly provide what should be the appropriate option for the statutory auditor of the company to report on this matter. So you could see that this question is indicating something regarding laws and regulations. Also, they are talking about something which is very significant amount for the organization like Abhinandan Limited, 500 crores. Okay, and also there is non-compliance of the laws and regulations here. Alright, so if you look at it, they are focusing on SA 250. They are also focusing on SA 570 and also on 705. Now you might wonder why 705, because if you look at such a big show cause notice which has been arrived, they are telling there is no requirement for them to create a provision. Don't you think this is an indication for a provision to be created? And this they have omitted. Don't you think it is a material misstatement done by them? Yes, which could definitely lead to modification in the auditor's report. Got clear? So here the question is highlighting three standards. 1, 250, consideration of laws and regulations by the management. So the auditor is going to ensure whether the laws and regulations have been properly complied with the management or not. If not, he has to obtain the understanding as to why. Okay, and what are the other measures taken by them. 570, because this 500 crore is definitely going to be something it's an event which can cast an uncertainty on the continuation of the organization, its ability to continue as a going concern. And more so ever, even 705, the reason being, they have not created a provision for the said thing. There is a possibility, there is a probability of this outflow happening, and no provision has been created. It's 500 crore, a material misstatement. Correct? And this figure of 35 and 100 crore is telling you that the amount of penalty is way beyond the company's possibility of payment. So this could definitely impact the going concern of the organization. Correct? So all of these are given. So let us have a quick glance of how the answer has been given to you in the suggested answers. Alright. So let's see when we have rightly picked up. First, SA 250, consideration of laws and regulations. Alright. Then we have 570 as well, going concern. And then 705. Correct? So here, consideration of laws and regulations, the audit of financial statement, he has to obtain the understanding and need to evaluate the impact of the laws and regulation. Because these impact of the laws and regulations are directly impacting the financial statements. And we have studied as per 250 that whenever there is non-compliance on laws and regulation, and if that non-compliance of law and regulation has an impact on the financial statement, definitely it is the consideration of the auditor. Correct? And here definitely it is having an impact. So the auditor has to obtain an understanding of the same. So the auditor will inquire with the management and the TCWG as well with regard to the compliance of such laws and regulation. Also inspect the correspondence with the regulating and licensing authorities. Along with that, we know in the company's audit when we do, it's a company Abhinandan Manufacturing Limited. So there is a reporting as per section 143 subsection 3 clause J also, that you have to report regarding the litigations, the pending litigations of financial statements. So that also you have to point out. 570, you have to very clearly disclose regarding the material uncertainties existing. If you do not do that, then obviously 705 also will come into picture, where if the disclosures are not done, or even if the requirement of the provision is not being created as required, then modification can happen. So if you look at the, we'll come to the main conclusion of the answer. As a result, appropriate disclosure should be provided by the management for such event, which can cast a significant doubt on the entity's ability to continue as going concern. As no appropriate disclosure has been provided by Abhinandan for such show cause notice, Subhahu and company should report this matter in their audit report under going concern para as per SA 570 and under clause J of section 143 subsection 3 of the Companies Act 2013. Also, the auditor is required to issue an adverse opinion as per 705, that is modification to the opinion in the independent auditor's report. Alright, one question highlighting so many pointers. So, all of them become very, very important. Clear? Then, let's go back to the questions again. 12th one, Chintamani Limited appoints Chintan and Mani as statutory auditors for the financial year 21-22. Chintan and Mani seem to have different opinions on audit approach to be adopted for the audit of Chintamani Limited. Mani is of the opinion that 100% checking is not required and they can rely on audit sampling techniques in order to provide them reasonable basis on which they can draw conclusion about the entire population. Chintan is concerned that whether the use of audit sampling has provided a reasonable basis for conclusion about the population that has been tested. You are required to guide Chintan about his role if the audit sampling has not provided a reasonable basis for the conclusion about the population that has been tested in accordance with SA 530. Very simple. Here, two discussions are happening. One is telling we'll do sampling. Other wants to know the impact of sampling. Okay, so obviously, suppose the question is telling you are required to guide Chintan about his role if the audit sampling has not provided a reasonable basis. So, they have performed audit sampling. Suppose if the audit sampling is not effective, that means the result of the sample is not, is not a one which can be projected on the main population to give the opinion. Alright. So, in that case, sampling strategy has failed. So, in that case, what will you do as the auditor? Very simple. Inform the same with the management. Ask them to inquire further if there is any possibility of the misstatements regarding the similar misstatements which they have identified as samples. Okay. So, in the samples, whatever misstatements they have identified, check for the possibility or the repetition of the same kind of misstatement in the overall population. Okay. Also, you could look into the alternative course of actions, extend the nature, timing and extent of the audit procedures. Alright. So, that is what you will do when the conclusions are not appropriate when it is coming to sampling. So, this directly you could have an exposure to SA 530 and you can get an understanding of the same. Alright. Then, risk assessment and internal control, next one. A very interesting question, okay. So, let's have a proper reading of this question and then we'll go on to the answer. Arihant Limited was engaged in the business of owning and managing hotels and resorts, selling tourism packages and performing airline bookings for corporates and individuals. It appointed Upadhyay and Company as a statutory auditor for the financial year 21-22. While planning the audit team decided that the risk of improper revenue recognition from the hotel business should be treated as a fraud risk, should not be treated as fraud risk. This conclusion was based on the assessment of the earlier years, wherein no fraud was identified in the revenue recorded from such business. While testing the internal financial controls over the process of revenue recognition, it was identified that the controls are not properly designed to mitigate the risk of fraud and risk of improper revenue recognition. As a result, the audit team decided to perform additional substantive testing. However, the audit team still were to the conclusion that there is no risk of fraud in revenue recognition. Due to the course of substantive testing, it was identified that the management did not account for revenue received from the corporate hotel booking amounting to 35 crores. These amounts were partially received in the company's bank accounts and partially received in CFO's personal account. Very nice. Then, the amounts received in the bank account of the company were disclosed as advances against future bookings. In the light of the above scenario, kindly guide the statutory auditors with respect to their responsibility relating to fraud in an audit of financial statement. So when you look at the question itself, we know they're talking about SA 240. Very clear understanding is that revenue recognition is always to be considered as an area where there is going to be a possibility of fraud, or which we would be considering to be a fraud risk factor. Every organization, whichever we take into account for the purpose of doing the audit, it is understandable that this item is considered to be a risky area. There has to be proper checking of the internal control. You have to check all the assessment of risk properly in the area of revenue recognition, because this area is prone, okay, or is considered to be an area where fraud can be committed. Alright. So here if you have seen that first of all they decided that they would not consider it to be a fraud risk element, that itself the very beginning goes inappropriate. Okay, later when they did the substantive procedures, they understood about the 35 crore as well. Okay, so here you give the reference to 240, and it is a responsibility as the auditor that that area should be considered particularly as a fraud risk area. Okay, so fraud factor is going to be present there. So evaluation has to be done with that direction there. Second, here very importantly, we'll have a suggested answer reading now, where you will see they have also given reference to section 143 subsection 12, reporting of fraud by the auditor. Okay, when it is 1 crore and above, we give it to the central government, and below we do not report it to CG, but we give it in the board's report. Correct? It has to be appearing where the disclosure has to happen in the board of directors report. Correct? So that also has been given as a part of the suggested answers. So let us have a reading for the same. So if you have understood the question, they are simply telling that they did not consider the revenue items to be risky, but there happened to be a risky element on the detailed checking. Internal control was weak. There were prone to risky misstatements. Also, with deep scrutiny, they understood that there was misstatement almost an amount of 35 crore. Part of it was shown as advance, okay, and part of it was gone to CFO's personal account. So there was a fraud committed. All right. So let's see how is the suggested answer given here. All right. So as per SA 240, so correctly highlighted the auditor's responsibility relating to fraud in audit of financial statements. When identifying assessing the risk of material misstatement due to fraud, the auditor shall, based on the presumption that there are risk of fraud in revenue recognition, evaluate which type of revenue transaction and assertion give rise to such risk. So always understand in the course of audit, the presumption has to be there that revenue will be having a risky element. Alright. So with that perception only, or with that presumption only, we are going to do the audit. Then when we decide the response to the assessed risk, okay, so that we are going to do as per SA 330. Now, the presumption that there are risk of fraud in revenue recognition may be refuted. Yes, it is debatable. For example, the auditor may conclude that there is no risk of material misstatement due to fraud relating to revenue recognition in case where there is single type of simple revenue transaction. For example, leasehold revenue from a single unit rental property. However, where there is complex revenue structure or where there is lack of control on the revenue recognition, there is high probability of fraud risk in the revenue recognition. So refuted means what? It is debatable. If they are simple, risky things could not be there. But if they are complex structured, the inflow, if there is complex, then there could be a possibility of high risk of material misstatement due to fraud. Money coming in, manipulation possible. Alright, then. Obtaining an understanding of the entity and its environment, including entity's internal control, is continuous, dynamic and process of gathering, updating and analyzing the information. Alright, here. During the year, it was identified that management did not account for the revenue from corporate bookings of 35 crore. These amounts were partially received, so that is the repetition what is given in the question. Therefore, the auditor, while performing risk assessment procedure, should consider the complexity and the nature of revenue, determine the fraud recognition here. Alright, so here moreover the audit team should have recognized fraud risk by identifying the deficiencies in the internal control over revenue recognition process and should have treated the risk of improper revenue recognition as a significant risk. In fact, when you talk about significant risk, any risk which is an indicator of fraud risk factors is considered to be what? A significant risk. And also I told you that they have given indication to section 143 subsection 12. Okay, this question is considered to be one of the, I found it to be very interesting because usually we skip out the understanding in SA 240 that revenue items are considered to be risky items. So these cannot be ignored by the auditor. You have to have a presumption in your mind that whenever there is inflow, whenever there is revenue, there is an element of risk going to be present. Risk of fraud also possible. So when you do fraud risk checking, revenue items will be considered to be important. So overlooking cannot happen. There has to be internal control checking all of that. Also, when you identify the fraud and when the amounts are above 1 crore within the prescribed framework, you have to inform to central government. Alright. So that also they have given as a part of extra information here, or they have expected you to write it because it is about a company. Alright. Then moving on to the next question. 14th will not do a detailed discussion because this is like the most favorite question, the most repeated question. Every time from automated environment, you would find a question like this only. Alright. So here they are talking about a particular organization which is running in an automated environment. You are required to briefly explain general IT controls. General IT controls is what? The infrastructure, the architecture, the database, okay, all of that. Application controls, those controls on particular application, every single application, what controls they have, user IDs, passwords, okay, all of that. IT departmental controls, basically we refer them to manual controls. Alright. So about this, a very clear understanding is given in the material so that you can have a look. And trust me, I don't know why the institute's favorite question. Usually a question from here is going to be regarding these. Okay, so you can elaborately write it. The answer is readily available. Okay, then moving on to the next, the company audit. The balance sheet extract of Siddha Limited required to prepare financial statement under Ind AS as per 31st March 2022 in and as under. Comment on the presentation in terms of Division 2 of Schedule 3 of the Companies Act. So for this, you need to have an understanding of Ind AS. Importantly, that is the reason financial reporting becomes very important for answering the auditing papers. This knowledge you don't have, this answer only you cannot give. Alright. So here we have the presentations given to us. We have to identify the misstatements. Alright, or the presentations which have happened wrongly. So let's take one by one. First of all, property, plant and equipment, they have categorized trademark. No, which is, it has to come as other intangible assets. Specifically under Division 2 of Schedule 3, trademark will be classified under other intangible assets. So first is going to be other intangible assets. Then other non-current assets, bank deposit with more than 12 months maturity. No, it's other financial assets that we put in here. Then we have shares option outstanding account, which is coming as a part of equity. No, it is coming specifically under other equity. Other current liability will be other financial liabilities. Because specifically it's been given in the Division 2, okay, of Schedule 3 about these headings very clearly. So trademark wrongly given under property, plant and equipment, which has to be categorized under other intangible assets. Then bank deposit with more than 12 months maturity should come under other financial assets, not under other non-current assets. Share option outstanding account will not be as a part of equity, it comes under other equity. Other current liabilities have given application money received for allotment of securities, etc. That will come under other financial liabilities, okay, because it is interest accrued thereon, okay. So this will come under other financial liabilities. Alright, we'll have just a quick check of whether it is all falling in place. Alright, yeah. So first one, trademark is not to be categorized as PPE since they are specifically to be disclosed under, correct, other intangible assets. Bank deposits will come under other financial assets, correct. Share will come under other equity. And then interest accrued thereon will come as a part of other financial liabilities. Under the head other financial liabilities. So it's all correct. So all the 4 pointers go correctly. Okay, alright. So with this, let us take the next one. So the next question for a discussion will be 16th. Gautam Limited had borrowed 1000 crore from XYZ Bank, the principal of which was repayable after 5 years and interest was payable at the end of each year. For 4 years, Gautam Limited paid the interest amount on time. Gautam Limited defaulted the 5th installment on interest payment and principal, which was due on the 30th of June. On March 31, Gautam Limited approached XYZ Bank and MNO Bank to restructure the existing liability. Alright, as a result, the existing principal and the outstanding and the overdue interest was restructured into a new loan amounting to 1100 crore. Alright, with all interest, all the principal and all the overdue, everything, they have turned up to 1100 crore. Okay. The management did not provide any disclosure for the default on the loan on the belief that the loan ceased to exist and the new loan has a maturity after 5 years. During the statutory audit for the financial year 21-22, KP and Company identified this transaction and obtained the relevant document and understanding. Based on the underlying document, it was identified that the said restructuring agreement was approved and signed on April 8th, 2022 by both the banks. As a result, on 31st March 2022, the restructuring was still not approved. In the light of the above scenario, kindly guide the statutory auditor in reporting this transaction. Very simply, they are giving you an indicator to the CARO reporting. Because this situation did exist on 31st of March, because the restructuring scheme was approved only on 8th of April 2022. So as on 31st March 2022, the situation was the same, because of which the reporting will become very, very important. Alright. So let us look at the reporting. Alright. So as per the clause 3.9 of CARO 2020, the auditor is required to report whether the company has defaulted in the repayment of the loan or other borrowing, or in the payment of interest thereon to any lender. If yes, the period and the amount of default is to be reported as per the format. So here XYZ bank had given the loan. So the current year, the company has not even also paid the interest, plus principal repayment was also due, which was not paid. Alright. So principal repayment, okay, the timeline would be different, but is there a default in the interest payment at least? Yes. So obviously, as on 31st March, the position did exist like that, where there was a default in the payment. Because of which, as per CARO 2020, in clause 9, there has to be a reporting to be done. So this is the way reporting is done. First, the nature of the borrowing, including the debt security, name of the lender, okay. So here you will be having the bank, amount not paid on the due date, whether principal or interest, number of days delay or unpaid, and remarks if any. So these are all the columnar of chart that you will prepare. In the given case, the company Gautam Limited defaulted in the payment of principal amount of loan due of 1000 crore on 30th of June 2021 and the interest installment of 100 crore. The said default continued till the end of the year, and on 8th April 2022, a restructuring agreement was signed by the bank and the company for restructuring the outstanding loan. Moreover, no disclosure was provided by the company with respect to the said matter. Hence, the auditor is required to report the same matter under clause 9 of para 3 of CARO 2020, that is whether company has defaulted in the repayment of loan if he has provided the details. One more thing very important here is also understand the auditor needs to consider the impact of the non-disclosure and the non-compliance with the financial reporting framework, okay, and accordingly the auditor needs to either issue a qualified opinion or an adverse opinion depending upon SA 705. Okay, why? Because they have absolutely not spoken in their financial statements about this debt, okay, assuming that they have restructured it and there is a new loan. So about the existing loan, they have completely eliminated the disclosure. That is wrong. Okay, so depending upon the pervasiveness, we are going to decide whether qualified or adverse opinion. So both have to be taken into consideration. So you give the CARO reporting also because there is default in the repayment, plus you will also give the 705, that is SA 705 requirement. You will check whether there is a need for modification. Alright. Understand whatever timeline they are giving here, this date is very important, because if the restructuring would have happened before that, the things would be different. But here it is happening after the year end. So as on 31st March, the position is still what? A defaulting party. Alright, so in that case, it is very important for the auditor to report the same. Clear? Then, moving on to the next question. Alright. Now this 17th question, apparently for me, I think every student will be able to answer this, and it's quite simple also. Everybody will be able to do it, okay? So 17th, CA Bahubali is the statutory auditor of Bharat Limited for the financial year 21-22. During the course of audit, CA Bahubali noticed the following. With respect to the debtors amounting to 240 crores, no balance confirmation was received by the audit team. Further, there have been defaults on the payment obligation by the debtors on the due dates during the year under audit. So you have not received the balance confirmation, so you have not received audit evidence which you are obtaining. The company has created a provision for bad and doubtful debts to the tune of 40 crores during the year of audit. The company has stated that the provision is based on the receivables which are older than 39 months old, which according to the audit team is inadequate, and such audit team is unable to ascertain the carrying value of the trade receivables, so they are not able to value the debtors. In respect of inventory, which constitutes 38% of the total assets of the company during the reporting period, the management has not undertaken physical verification of the inventory at the periodical level. So physical verification not conducted. Also, company has not maintained adequate inventory records for the factory. So, physical verification, your evidence through observation. Inventory, your evidence through inspection. Records are not maintained. The audit team was unable to undertake the physical inventory count as such, and the value of the inventory could not be verified. Under the above circumstances, what kind of opinion should CA Bahubali give? Write the opinion paragraph and the basis of opinion paragraph to be included in the independent auditor's report. Alright. So, with this you must have very clearly understood that they are in a position of not obtaining sufficient appropriate audit evidence to give their opinion. So, when the auditor is in this position, you end up giving a disclaimer of opinion. And I believe everybody must have got this answer. Got it? But the question does not stop here. You also have to give the further thing, which is write the opinion paragraph. Opinion paragraph will look different. And basis of the opinion paragraph. Alright? When it comes to disclaimer of opinion, there is going to be complete different kind of reporting. Alright? So, opinion paragraph is absolutely not going to have an opinion, whereas we are going to tell we are not able to give an opinion because of inadequacy of obtaining a sufficient and appropriate audit evidence. In the basis for opinion also, we are going to have different points as compared to the regular one. Okay? But I will take the question B also together, and together we will go on with the reading. How should auditor give description of the auditor's responsibility for the audit of financial statement when the auditor disclaims an opinion for the financial statement? Okay? So, what we can do is, now when you look at the suggested answer, you would be able to read the opinion paragraph, the basis for opinion paragraph, and along with that you will also be able to understand the auditor's responsibility paragraph in case there is disclaimer of opinion. Okay? So, at one point in time you get exposed to what? Opinion, basis, and also auditor's responsibility, and there is going to be difference compared to the regular reports. Alright? So, let us have a check of the same.